Bitcoin is 68K, my friends. Hey guys, it's Brendan from Market Makers. Let me show you a pattern. I know you guys are checking your phones right now. You're like, is this the right channel? But at Market Makers, we don't have a bias. We trade price action. I'm super excited to show you this pattern. If you weren't paying attention today, you're busy, you're at work. Guys, the SPX dumped. The Dow dumped. Bitcoin held its ground in the distribution box. We're not spending any time on Wyckoff today, but it's important to stay in this box because you can make new all-time highs. Okay, this candle itself is weak. It is a lower low and a lower high than the previous two candles, which were also lower lows and lower highs from the all-time high. But I have a pattern that can kick us up a notch, and I think you're going to really like it. So let me show you what we want to avoid. Markdown. We don't want markdown because that brings us to accumulation. These are weekly candles, and this could take weeks. It could take months. We want to end the year with a bang, and I have a pattern that does that, my friends. 4-hour time frame. You guys are looking at your screen. You're like, what am I looking at? Let me show you some basics first. You probably recognize this pattern, right? What is this? Modified like cup and handle, right? Euler came out in the 1960s. He called this a saucer and platform pattern. O'Neill made it famous when he called it a cup and handle pattern. This is not what's important. What's important is this consolidation above the base. This is a volatility compression pattern, okay? Let me show you this. So you have from your peak to your trough, 10.5%. The volatility, if you're not aware of volatility, I trade VTV. The guys that have been with us since we formed the room in June know that. I trade volatility, trend, and volume. This pattern's made me a ton of money in the Forex space. You have volatility is a separation of candles, okay? So you want to see this contract. Right now it's at 10.5%. You want it to go down by roughly 40 to 50% per wave. These are waves. And then we're at 5.5% right here, 5.65%. You can typically get 2 to 4 waves, and then you get a breakout. This is probably easy to draw. Let me draw this for you. So price moves like this in this pattern. Hit your ceiling, hit your base, out. Okay, and I'll show you how I get the price target. So what we're looking at is this compression. We could actually break out from here. Staying in this upper echelon is extremely important of the Darvis box. If we fall below and compress down here and then consolidate down here, compress, you can break out and break down. Okay, you want to avoid doing that. Well, how do you know which way you're going directionally? Guys, I use Darvis boxes for that. Okay, these are bullish indicators or bearish indicators. They are pivot points in price. Jesse Livermore, the greatest trader that's ever lived, if you should read about him. He's so famous, actually. Wyckoff wrote a book about Jesse Livermore. Jesse Livermore famously made $3 million in a day. He made over $1 billion, $1 billion as a single individual trader. His whole concept was pivot point. That's why I bring him up. You have to understand the pivot points in price. Livermore called it the point of least resistance. That's the direction you're going to go. Darvis used Darvis volatility boxes to encapsulate volatility and give him trend direction when he was trading. Darvis wrote a book, How I Made $2 million in the Stock Market, which in today's terms is over $20 million, and he did it in less than 3 years. I put out educational videos in the room on Darvis. Guys, if you like this type of trading, if you like this type of learning, check out our Discord. We have almost 6,000 people there. You would love the room. We do live streams all the time, blockchain updates almost every single night, as well as post our trade signals of trades that we actually take. I am constantly evolving as a trader, as all of us should, and I'm constantly putting out material and especially patterns for people to learn, and so is my admin team, my friends. So where do we get the 68K price target from? Well, let me show you that. The price target's quite simple, because we're going to use a Fibonacci pattern to show you how we get there. Let me shrink this down. So we're going to go from our high to our low to our high. The magnet's not on, but it'll be pretty close, guys. To our low. And the 238 of this pattern is the early activation point. You guys might be familiar with this by now. This is a white swan. Okay, a 238 gets you to, on the dot, 63,881. 63,881. Max extension is 886 on this pattern, and this gets you to roughly 68,284. This pattern is a white swan. It is a very powerful Fibonacci pattern. What do Fibonacci patterns do, guys? They show you the movement of price, okay? Price moves in patterns. It moves in waves. That's why you don't see me do thumbnails like 400K, 250K. I trade by price action and current trend, current time frame. If you're new to the channel, got some new subs, let me show you this. So price will move from X to A, which it already has, to B, to C, up to D, my friends. At that point, price would reverse and start to come down because price moves in waves. So this pattern, this volatility contraction pattern, has the ability to launch us up to potentially 68K. Very, very good trade, especially considering we're trading under 57K. That is a huge move, my friends. And if you're in our room, you'll get the trade signals when this happens. There's some key things we need to watch happen. We need to see our ATR volatility descend and level out. We need to see our volume go down to almost nothing. Why do we need to see our volume go down to almost nothing? Because you're shaking the weak hands out. As Wyckoff said, supply and demand drives the marketplace. The weak hands are being shaken out. The supply is being absorbed, and then volume bars have the ability, small volume bars, to kick up price a lot, and you get a verifiable strong uptrend. And again, when you marry this with Darvas boxes, you get a pivot point in the price that you can verify you are heading in the right direction, because we don't want to break this Darvas box down here, because then we're going to 47.5 to test a 200 moving average on the daily. So right now, this is very, very bullish. We may not even need a third box, but let's just say if we were to break out from here, that's December 1st, obviously, looking at this, you could have the trend breakout, I mean, anytime up to the December 10th or 11th, okay, the way price is tracking. And if we look at some other indicators here, let me see, where is Ichi at? Let's check out our Ichi cloud, see where our support resistance is. Oh, see, this is actually perfect. Look at this. So what you have right here, let me get my brush. This is a Kumo twist. This is a green Kumo cloud turning into a red cloud, okay? This is a support cloud. Ichi visualizes support and resistance with clouds. Support cloud's green, the resistance cloud red. We're at the point where they meet this box right here and turn. This is called a Kumo twist, okay? Guys, I've been cloud trading for over 20 years. Nobody gives you this stuff on YouTube, my friends. There's so much to learn in trading, and it's so hard to find good source material for a lot of this stuff. But look what's happening right here is why I bring this up. It looks like you may be making a Kumo twist because price is staying elevated. And if you do, you're going to have a very weak resistance point right here in the middle where you could see price break out. So what I'm saying to you is price could very easily do this, okay? So that would be perfect. And I guess on the timeline, once again, if it does this anywhere in this range, yeah, December 10th, December 11th, December 12th, it depends how long we consolidate for before we break out, but you guys will know if you were in the room, my friends. Let's look at some other things, some other key indicators. Let me see my displaced moving averages. I want to make sure we're consolidating. Oh, perfect. We're consolidating right in the moving average. You want to really decrease volatility and tighten these boxes as much as you can into the low single digits. Get this thing down to 4%. 3.5%, and you will see an explosion in price. It'll be a fantastic thing to see. Let's look at the 1 hour time frame and see if we have anything different here. So the 1 hour time frame, again, it takes 4 1 hour candles to make a 4 hour candle, so it's going to present slightly differently. You can see you are getting compression. You have 5.16 down to 4.65, down to 4.48. It is slower, but again, we need to see price compress, and again, very bullish to stay above your 200 moving average. Bitcoin could have easily fallen out of this moving, or falling underneath this moving average with the macro markets dumping today, because they're all tied together. It's the same money in both markets. And obviously crypto is much more speculative, much more volatile. Bitcoin is 4 times more volatile than gold, but we are here to trade it because you can make a lot of money and make it very quickly, my friends. Guys, if you enjoyed this video, please smash the like button. Check out our room. Check out BitGet, where we do all of our trading. BitGet, $630 in bonuses. The link is in the video description. No KYC. You don't need an ID. Just use an email, and no VPN. Even Bybit makes you use a VPN. You don't need a VPN. You're completely anonymous on a liquid exchange, guys. It's a beautiful thing. It's a beautiful place to be. Hope you enjoyed the video, my friends. Happy trading. Another video coming soon. Pro Trades video coming out after this. Check it out. Talk to you soon, guys.